Stock of the day is Life360, the software tech company, which does provide that real-time location sharing app, reporting a 15% increase in first quarter revenue to just over $78 million US, while confirming it's filed a prospectus with US SEC for a dual listing on the Nasdaq. Total subscription revenue coming in at $61.5 million. That's up 19% year on year, while core subscription revenue rose 23% to $57 million. And the company also narrowing its first quarter net loss to $9.8 million US and saying it's making meaningful progress on its path to profitability. Interestingly, it's flagged a potential partnership with small investment in the space in that space tech firm Hubble as well. Well, let's get into some analysis then. Claude, what did you make of the results and the path ahead for Life360, given perhaps those developments too?
Well, look, I think I'll sort of pick up where we left off last time, Andrew, because I think it was in January just this year, less than 6 months ago, that we were discussing this stock on the show. And there were lots of nuances of what we discussed, but when you pushed me for a recommendation on it, ultimately I went with speculative buy, whilst noting that I didn't own shares in it myself. At that time, I perhaps erroneously was saying, I'm trying to not do too much speculative stuff. But, I was seeing that as a speculative opportunity back then. And that's what I said. Look, my view broadly hasn't changed. We saw the results today. They came out hardware revenue of about 10.2 million, but cost of hardware revenue being 8 million. Now that's a improvement, of course, but in that there's at least some gross profit, but it's still not a very good business. I don't think it's ever going to be a very good business. That subscription revenue still actually really is a good business. You really would, consider buying this if it was a profitable company. I would anyway. I would consider there to be some potential of this being a long-term high-quality business. But for that, I really need to see it be probably profitable. That means statutory net profit. So the net loss in the last 3 months was 9.7 million. Now that's a great improvement on the prior corresponding period of a loss being 14 million, but it's still quite a loss. They're still going to lose at this rate like $35 million a year or whatever, which just isn't that attractive for me to just be getting on board. As a long-term fundamental investor, I don't see that as necessarily being obviously undervalued. However, look, I think that the big change here since we last spoke about it is the share price. Last time I explained how I was sensing very strong narrative shift in favor of these guys, and definitely thought that, there was a speculative short-term opportunity there. And I think we've seen that play out massively so, right? They have made progress towards turning things around, and they are probably on a better track now than they were before. But that was the narrative shift was happening. They do have a sustainable business there in that software subscription business that keeps on being more widely accepted by people and used for longer than some people might have expected. However, we've seen the share price almost double in that time. I think it was under $8 when we're talking about it. Even after dropping 5% today, it's still $14.70. So that's the biggest change that's happened in this whole thing, is the share price has doubled. And I'm glad we are talking about it today, because I'm getting the opportunity now to close out my speculative buy call. Because it was never a super long-term position for me, because it's still speculative. It's still not profitable. So for that reason, I would be closing it out today pretty much and saying, look, this is still a way away from profitability. I am interested in this company if and when it becomes a profitable business. I'm not too fussed about its US IPO one way or the other. But what I want to see is it actually become profitable and be profitable. And now that may be about to happen. But right now, I no longer see that speculative opportunity, because we've already had this huge sentiment uplift. So for now, I'd probably be closing out. I'd probably be selling if I had bought, which I didn't. But if I had made that speculation when I called it a speculative buy, I'd probably be selling it now and just taking that profits, sit on the sidelines, wait and see, does it cross over into profitability? If it turns out to be a sustainably profitable, growing company that can grow for many years, then you might miss some games, but there'll still be time to get into it, because in that scenario, you have a potentially long-term buy and hold.
All right, so you're taking profit. Luke, can you see the path to profitability?
You can see the path to profitability, Andrew, because Claude went and did the same thing I did. I remembered we spoke about it not too long ago, went and had a look. And yeah, it was back in early January. We both said similar things, and the stock's gone on to double. And what we said back then holds true today, which is revenue still growing quite strongly, year on year up about 20-odd%, quarter on quarter up as well. And they continue to keep those operating expenses flat. So, that's the jaws of leverage opening up. And if that continues, then you'll see profitability, as Claude points out. Now, the problem I had, circa 5 months ago, and it's now a much bigger problem, is what are you paying for that potential profitability? And back then it was a $1.6 billion business, and today it sits over $3 billion. Now, you can pay a high multiple for a growing earnings stream. Claude with Pro Medicus is the classic example of that. You've got to be ultra certain that earnings stream is going to grow over the medium longer term. And go back to my comments a few months ago, and they still stand true today. I struggle to do that with Life360. I think they've created a really good business as it sits here today, but I just wonder about the sustainability of the product they offer. It might be quite sticky for the customers they have there today, but as I said back then, I can't help but feel this is one of those products that can become a feature of a bigger ecosystem, to an Apple or a Google across their iOS or Android systems. And that's what sort of stops me from wanting to pay these eye-watering multiples. But what does look like a good business today, and one that I think will grow into profitability in the short term. So I agree with Claude. I think this is one, especially if you've been there for what's doubled over the last few months. I think this is one where you're looking to take profits. I wouldn't necessarily go and sell everything, but certainly reduce that exposure. It's run quite hard. That valuation is very steep, and I just don't think that the long-term the long-term earnings that's being priced in by that valuation is necessarily as safe as maybe what the market is pricing in right now. So I think it's a take profits as well, Andrew.
All right, so both of you agree then. Take some profits there, given it has essentially doubled since January. That's Life360.